Imagine being 94 years old, worth over $140 billion, and still eating McDonald's for breakfast every single day. This is the story of Warren Buffett, the man who turned pocket change into a fortune, outsmarted Wall Street, and became the greatest investor the world has ever seen. But how did a kid from Nebraska go from delivering newspapers to owning stakes in Apple, Coca-Cola, and American Express? Stick around, because we're diving deep into his life, his genius strategies, and the secrets that made him a legend. Oh, and if you make it to the end, I've got a mind-blowing Buffett trick that you can use to start building your own wealth. Hit that subscribe button and let's get started. Guys, this dollar bill, Warren Buffett could turn it into millions. Let's find out how.
Greatest investor of our time, but you'll find him in Omaha, Nebraska. He has billions of dollars, but his lifestyle is Midwest simplicity, and all that money is going to charity. He's been wildly successful, but says there's nothing to it. We're off to meet the Wizard of Omaha, Warren Buffett.
You've got it.
How do you apply that to the market?
Well,
or to investing?
in the market, if you think the market knows more about what your business is, in other words,
Section 1. Who is Warren Buffett? All right, let's set the stage. You've heard the name Warren Buffett, right? But let's be clear, he's not just a billionaire. He's the man who redefined what it means to build wealth slowly, smartly, and with laser-sharp discipline. They call him the Oracle of Omaha, not just because he's rich, but because his investing advice is practically gospel in the financial world. And get this, his net worth in 2025, a jaw-dropping $140 billion. That's more than the GDP of countries like Jordan or Latvia. But here's where it gets really interesting. While other billionaires are out flexing their wealth with 200-foot yachts, rocket ships, and golden bathtubs, Buffett's just chilling in the same house he bought back in 1958. You heard that right, he paid $31,500 for it. No Beverly Hills mansion, no tech palace in Silicon Valley, just a modest home in Omaha, Nebraska. And while Elon's building Mars rockets and Bezos is racing super yachts, Warren? He's literally sipping on a cherry Coke, munching on peanuts, and reading through annual reports like they're his favorite comic books. No joke. That's the kind of guy we're talking about. But let's rewind a bit, because to really understand who Warren Buffett is, we need to go back, way back. Born on August 30, 1930, right in the middle of the Great Depression, Warren Edward Buffett entered a world where every penny counted. He grew up in Omaha, Nebraska, the very city that would later become his empire's headquarters. His father, Howard Buffett, was a stockbroker who later became a U.S. congressman. His mom, Lila, was a homemaker, but Warren? He was built different. While other kids were learning how to ride bikes or trade baseball cards, little Warren was out hustling. Not joking, this guy started thinking about business before he hit double digits in age. At age 6, he bought a 6-pack of Coca-Cola from his grandfather's grocery store for 25 cents and sold each bottle for a nickel. He made a 5-cent profit and loved the feeling of making money. By the time he was 11, he was already investing in stocks. Most of us were still learning how to multiply 7x8, and Warren was over here flipping shares like a mini Wall Street tycoon. And if you think that's wild, get this, he filed his first tax return at age 14, and he claimed a $35 deduction for his bicycle. Why? Because he used it for his newspaper delivery route. That's next-level financial IQ. But here's the moment that'll really blow your mind. Want to know what Warren Buffett's very first real business was? You're not gonna believe this. He bought a used pinball machine for $25 with a friend. Just a regular old pinball machine. They placed it in a local barber shop. Within weeks, they made enough money to buy more machines. Soon, they had multiple pinball machines in multiple barber shops all over town. And that was just the beginning. By the time he was 17, Warren had already made over $50,000 in today's money, and he hadn't even started college yet. So when people ask, who is Warren Buffett? The answer isn't just billionaire investor. He's a self-made legend, a numbers genius, a guy who turned simplicity into a superpower. And this story, it's just getting started. So buckle up, because if you thought that was impressive, wait until you hear how he turned Berkshire Hathaway, a struggling textile mill, into a $900 billion investment empire. But before we get there, let's talk about Warren's early business ventures and how they secretly laid the foundation for one of the greatest investing minds in history.
And the second rule of investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth and you buy a group of them, you basically don't lose money.
Section 2. The Kid Who Loved Numbers. Let's rewind the clock to the dusty streets of Omaha in the 1930s. The Great Depression was still in full swing, but somewhere on a quiet porch sat a little boy with oversized glasses, legs dangling, completely obsessed, not with baseball, not with toy trains, but with numbers. That kid? Warren Buffett. And while most 6-year-olds were dreaming of candy or cartoons, Warren was dreaming of profit margins. Picture it. 6-year-old Warren, a stack of chewing gum in one hand and a calculator in the other. Okay, maybe not a calculator, but you get the point. He bought packs of juicy fruit and Wrigley's for a nickel each and flipped them stick by stick at a penny a pop. That's 5 sticks, 1 penny each. Boom, a clean profit. This wasn't just a cute kid playing shopkeeper. This was baby Buffett, already thinking like a businessman. And it didn't stop there. By the time he was 11, Warren made his first stock market investment. Yeah, 11. While most of us were busy figuring out long division, Warren was buying shares. He'd scraped together $114 from his paper route, a job that had him biking through snowstorms, blazing heat, and rain-soaked mornings just to earn a few cents per delivery. With that hard-earned cash, he bought 3 shares of a company called City Service Preferred at $38 each. But then, bam! The stock dropped to $27. Most 11-year-olds would have panicked, maybe even cried. Not Warren. He waited. And when it bounced back up to $40, he sold. He made a small profit, but it came with a big lesson. Patience pays. That moment, it was Buffett's first brush with market volatility, and he handled it better than most grown investors. But wait, it gets crazier. This kid wasn't just delivering papers. He was turning it into an empire. Working for the Washington Post, Warren delivered thousands of newspapers every month. He tracked subscriptions, mapped efficient routes, and negotiated with customers like a tiny CDO. At one point, he was earning $175 a month as a teenager. And mind you, back then, a loaf of bread cost a dime. By the time he hit high school, Warren had saved over $1,200. Adjusted for inflation, that's over $20,000 today. But did he blow it on a new bike or comic books? No, he invested it, because this wasn't just a kid who liked money, he understood it. At age 13, Warren filed his first income tax return. Yes, 13, and he claimed a $35 deduction for his bicycle. Why? Because he used it for his business. That's elite thinking. But here's where it really takes off. Warren wasn't just running one hustle. He had multiple streams of income before he was old enough to drive. He bought used pinball machines for $25 each, placed them in local barbershops, and split the profits with the owners. It was a genius win-win. Soon, he had a fleet of machines across town. While other kids were worried about school dances, Warren was managing passive income. He also sold used golf balls fished out of country club ponds, created and sold a horse racing tip sheet, and even tried flipping stamps and bottle caps. If it could be bought and sold, Warren was on it. And here's the kicker, this wasn't just child's play. These early ventures were mini masterclasses in capital, risk, negotiation, and scale. While others were playing Monopoly, Warren was living it. And yet, despite all that, the real turning point came not from profit, but from inspiration. Because around this time, Warren discovered someone who would change his life forever. A man whose books lit a fire in him, his hero, his mentor. The guy who made Warren Buffett realize that investing wasn't just a hobby, it could be a legacy. Ready to meet the man who shaped Warren's destiny? Let's talk about the legendary Benjamin Graham and the moment Warren stepped into the classroom that would change everything.
Afternoon, Mr. Buffett, Mr. Munger. Could you please advise us on what major mistakes we should avoid in both investing and in life?
Lucky if you're in the United States. Go around the world, you don't have a lot of choices in some places, but you should write your obituary and then try and figure out how to live up to it. That's something you get wiser on as you go along.
Section 3. Meeting Benjamin Graham. Fast forward to 1949. The war was over, the world was rebuilding, and a young Warren Buffett, now a college student, was searching for direction, not in sports, not in politics, but in numbers. And then it happened. He stumbled upon a book that didn't just speak to him, it rewired his brain. The book? The Intelligent Investor by Benjamin Graham. And let's be real, calling this just a book is like calling the Mona Lisa a doodle. For Warren Buffett, it was scripture. This wasn't some flashy Wall Street guide filled with hot tips and overnight riches. No, Graham's philosophy was the opposite of hype. It was calm, methodical, and genius. Graham's core idea, value investing. The concept was simple but revolutionary. Don't chase hype stocks, don't bet on trends, and don't follow the crowd. Instead, buy companies that are fundamentally worth more than what the market says. In other words, if a business is truly worth $100 a share, but the market's selling it for $50, you grab it. No questions asked. Buffett described it as finding dollar bills for 50 cents, and once he saw it, he couldn't unsee it. But Warren didn't stop at just reading Graham's work. He studied it, memorized it, and made it his personal investing blueprint. Obsessed. That doesn't even begin to describe it. He was hooked. He knew he had to learn directly from the man himself. So what did Warren do? He applied to Columbia Business School, specifically because Benjamin Graham taught there. Forget the prestige, forget the city. He didn't care. He just wanted to be in the room where the legend spoke. Imagine it, a young, sharp, 19-year-old Warren Buffett sitting in class, hanging on every word from Graham. And Graham wasn't just any professor. He was the guy who literally invented value investing. It was like learning painting from Picasso. The connection was instant. Graham recognized Warren's passion. Warren soaked in Graham's wisdom like a sponge. It was a mentor-protege bond that would shape not just Buffett's career, but the entire investing world. This book, Warren once said, holding up The Intelligent Investor, it changed my life. And he meant it. Graham taught him to ignore the screaming headlines, the market panics, the wild speculation. Instead, Warren learned to look at the numbers that mattered. Assets, liabilities, earnings, intrinsic value, the truth behind the ticker. But Warren wanted more. After graduation, he was determined to work for Benjamin Graham. He wrote letters, he called, he begged, but Graham said no. Warren was too young, too green. There were no openings. So what did Warren do? He said, "I'll work for free." That's how badly he wanted it. He didn't care about the paycheck. He wanted proximity to greatness. And eventually, Graham said yes. In 1954, Warren Buffett walked through the doors of Graham Newman Corporation, not as a billionaire, but as a rookie analyst with something to prove. And what he learned there? Priceless. He spent hours poring over financial statements, hunting for companies the market had forgotten. Boring names, quiet businesses, but underneath, pure gold. Where others saw meh, Warren saw magic. He found the undervalued, the overlooked, the underappreciated, and realized those were his golden tickets. This became Buffett's superpower, finding diamonds in the rough. He didn't need to gamble. He didn't need a hot tip. He had the discipline, the patience, and now, the playbook. And just when it seemed like he was finally mastering the game, he made a decision that shocked everyone. He left Graham's firm. Why? Because he was ready to build his own empire. Coming up next, how Warren Buffett took a failing textile company called Berkshire Hathaway and turned it into one of the most valuable corporations in the world. Trust me, you don't want to miss what happens next.
People had one thing in common. They knew they had it in themselves. They knew they could be something beyond where they were. They were willing to put their time, their energies to better themselves. What you really could do with more skills, it's just remarkable. So I would like to just tell you a couple of short stories, and we'll draw maybe a couple of lessons from them.
Section 4. The birth of Buffett partnerships. All right, it's 1956. Warren Buffett is just 25 years old, back in Omaha, Nebraska, the same modest city where he grew up slinging gum and delivering newspapers. But now, he's armed with knowledge, sharpened by Benjamin Graham himself, and ready to unleash his own strategy on the world. And he's got a plan. While most young men his age were trying to climb corporate ladders or settle into 9-to-5 jobs, Warren said no thanks. He wasn't chasing a corner office, he wanted full control. So he started something that would quietly become one of the greatest money-making machines in American history. Buffett Partnership Let. Here's how it worked. Warren went to people he trusted, family, friends, neighbors, and asked them to invest their money with him. Not a lot, just enough to give him a shot. The total, $105,100 from 7 limited partners. That's the seed money. But Warren, he didn't put in much cash himself. He put in something far more valuable, his brain. And get this, he didn't even take a salary. None. Zip. Nada. He only got paid if the partnership made a return above a set threshold. If the investors didn't make money, he didn't either. That's confidence. That's skin in the game. And spoiler alert, he made a lot of money. From 1957 to 1968, Buffett's partnership delivered an average annual return of 31.6%. That's more than triple what the Dow Jones was returning at the time, which hovered around 7 to 10%. While other investors were grinding for average gains, Warren was absolutely demolishing the market. Now here's where it gets interesting. One of his early plays was, wait for it, a struggling textile company called Berkshire Hathaway. Yes, that Berkshire Hathaway. Today, it's a $900 plus billion conglomerate. But back then, it was a dying business, a total snooze fest. Most investors wouldn't touch it with a 10-foot pole. But Warren, he saw something others didn't. He noticed the company was trading below its intrinsic value. So he started buying shares, slowly, methodically, at just $7.60 each. Now brace yourself for this, those shares. As of 2025, they're worth over $600,000 each. Let that sink in. This is where Warren Buffett's real genius comes into play. He didn't follow trends. He wasn't glued to ticker tape machines. He wasn't flipping stocks like pancakes. He was playing the long game. He focused on fundamentals, companies with real earnings, smart leadership, and what he called a moat. What's a moat? It's a competitive advantage so strong that no rival company can touch it. Think Coca-Cola with its secret formula and global brand power, or American Express with its premium network and elite customer base. These weren't just stocks, these were fortresses. And here's the kicker. Warren was doing all of this in a time before the internet, before Excel spreadsheets, before stock screener apps and AI bots. No fancy software, no algorithms, no high-frequency trading. Just a man, a pencil, a calculator, and a brain that operated like a financial supercomputer. He would sit for hours, poring over annual reports, thousands of pages, number by number, line by line. He didn't need fancy tech. His edge was his discipline, patience, and an unbreakable belief in the power of intrinsic value. And as the partnership grew, so did the legend of Warren Buffett. By the time the 1960s rolled around, Buffett Partnership-led was crushing Wall Street, and Warren had quietly amassed millions. But even with all the money rolling in, Warren stayed true to his roots, still humble, still methodical, still sipping cherry Coke. And soon, he was about to make the most important move of his life, turning Berkshire Hathaway from a flailing mill into a global powerhouse. But how did he do it? Stick around, because in the next chapter, we'll see how Buffett turned boring businesses into billion-dollar beasts. And trust me, you won't believe which ones made him rich.
1942, 80 years ago, I took $114.75, every penny I'd saved, and I bought 3 shares of City Service Preferred. And City Service is a pretty well-known name now and then.
Section 5, the personal side of Warren. All right, let's hit pause on the billion-dollar deals for a second, because to truly understand Warren Buffett, you've got to know the man behind the billions. And trust me, he's not what you expect. While most billionaires are flexing their wealth with mega mansions in Beverly Hills or skyscraper penthouses in Manhattan, Warren, he's been living in the same modest Omaha house since 1958. Yep, 5 bedrooms, simple design, no gates, no extravagant fountains. He paid $31,500 for it, and he's never wanted anything fancier. And the car? Not a Rolls-Royce, not a Bugatti. Warren drives a Cadillac, a regular one. In fact, he's known for keeping his cars for years. One of his past Cadillacs had so few miles on it, you'd think he barely left the driveway, which is kind of true. He doesn't care about status symbols. He cares about value, even in his personal life. Now let's talk about his diet, because this is legendary. Forget kale smoothies or private chefs. Warren eats like a teenager with a vending machine budget. His staples: McDonald's, Dairy Queen, and Cherry Coke. Yes, really. Every morning, he grabs breakfast from McDonald's, and he literally chooses his meal based on how the market's doing. If he's feeling confident, it's the bacon, egg, and cheese. If things are rough, he might scale down to a sausage patty. That's his version of market-driven living. And then there's the Cherry Coke addiction. Warren drinks 5 cans a day. Not a typo, 5. And he claims it's his secret to staying young. His logic? I checked the actuarial tables, and the lowest death rate is among 6-year-olds. So I decided to eat like a 6-year-old. You can't make this stuff up. But beneath all the quirks and billion-dollar brainpower, Warren is, at his core, a family man. He married Susan Thompson in 1952, and they had 3 kids: Susan, Howard, and Peter. Susan was his emotional anchor, his partner through life's ups and downs, but their relationship wasn't picture perfect. In fact, they lived apart for many years, though they remained legally married and deeply connected until her passing in 2004. Warren later married Astrid Menks in 2006, a woman Susan had actually introduced into Warren's life. The 3 of them had an unconventional but deeply respectful bond. It wasn't some billionaire tabloid drama, it was honest, messy, and real. Through all of it, Warren stayed grounded. He raised his kids to understand humility, not entitlement. In fact, when asked if he'd leave his fortune to them, he said they'd get enough money to do anything, but not enough to do nothing. Translation: no freeloaders in the Buffett household. And when Warren's not reading annual reports or making billion-dollar decisions, you know what he loves to do: play bridge. Yep, the card game your grandma plays. Warren is obsessed. He once said he'd play bridge 12 hours a day if he could. He even plays with Bill Gates, and they're known to enter competitive tournaments together because apparently billionaires don't play Monopoly, they just live it. Bridge keeps his mind sharp. It's strategic, it's psychological, and it's all about long-term thinking, just like investing. This is the side of Warren people don't always see. Not the mogul, not the Wall Street wizard, but the man who wears simple clothes, eats McNuggets, cherishes his family, and plays bridge like it's the Super Bowl. He's not just a financial genius, he's a walking contradiction. Modest, yet mighty. Playful, yet precise. And it's exactly this balance that makes him not just rich, but respected. Coming up next, we're diving into the move that truly changed Buffett's trajectory forever. The one where he takes control of a dying textile company and turns it into a trillion-dollar empire. Ready to find out how he turned Berkshire Hathaway into a beast? Let's go.
When I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them. I read books on technical analysis. I read Edwards and McGee. I think that was the classic then. Hundreds of pages. And I read that whole thing over and over again. I read Garfield and Drew. I read everything. And I thought, the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19.
Section 6. The Berkshire Hathaway empire begins. Let's fast forward to the swinging 1960s. While the Beatles were taking over the radio and America was racing to the moon, Warren Buffett was quietly staging one of the greatest corporate transformations in history. And it all started with a failing textile company. That's right, Berkshire Hathaway. It wasn't some high-flying tech company or an innovative disruptor. No, Berkshire was an old-school, dying textile mill, hemorrhaging cash and gasping for air in a shrinking industry. Most investors wouldn't touch it. But Warren, he saw an opportunity. Remember his golden rule from Benjamin Graham: buy dollar bills for 50 cents. That's exactly what Berkshire was. Its stock price was dirt cheap, but the company still had valuable assets, equipment, property, even a strong brand name. So Warren did what he does best. He started buying shares, slowly and quietly. He began in 1962, purchasing shares at just $7.60 each. That's less than the price of a Big Mac meal today. But this wasn't a burger, it was the seed of a financial empire. By 1965, Warren owned enough of the company to take full control. Now here's where things get really interesting. Warren wasn't interested in textiles. He knew the industry was on life support. The margins were thin. Foreign competition was rising, and automation was making the old machinery obsolete. But Warren didn't care about sewing machines. He cared about cash flow. Even though Berkshire's textile division was struggling, it still generated some cash. And instead of trying to save the sinking ship, Warren used it as a launchpad. He started buying other companies, ones with strong fundamentals and reliable profits. He snapped up insurance companies like National Indemnity and Geico, retail chains, and eventually stakes in brands like Coca-Cola, American Express, Bank of America, and later, Apple. That's how Berkshire Hathaway became what it is today. Not a textile company, but a multi-billion-dollar holding conglomerate with ownership in dozens of iconic companies. By 2025, the numbers are staggering. Berkshire Hathaway's market value surpassed $1 trillion. That's right, trillion with a T. And those humble $7.60 shares from the 60s. They're now worth over $600,000 each. Let that sink in. If you had invested just $1,000 back when Warren started buying, you'd be sitting on $80 million today. No crypto, no flashy IPOs, just disciplined, long-term investing. But the real genius move, it wasn't just the businesses Warren bought. It was how he used his capital. Take insurance companies like Geico, for example. When people buy insurance, they pay premiums up front, but claims don't get paid until later. That gives insurance companies a pool of cash called float. And Warren realized something brilliant. He could invest that float, tens of millions, even billions of dollars that technically wasn't his, but that he could use for years without paying it back immediately. It was like getting an interest-free loan every single day, forever. While most companies just parked that float in safe bonds, Warren took calculated risks and invested it into businesses and stocks that skyrocketed in value. That float became a snowball, rolling downhill, growing bigger and bigger with every rotation. That's the Buffett compounding machine in action. Buy low, hold long, reinvest, repeat. And here's the kicker. Warren didn't do this in Silicon Valley or Wall Street. He built a trillion-dollar empire from Omaha, Nebraska, proof that you don't need to be flashy to be legendary. You just need vision, patience, and a bulletproof strategy. Up next, you've seen how Warren turned Berkshire into a powerhouse. But wait till you see how he handpicked CEOs, nurtured companies like a gardener with billion-dollar seeds, and built a leadership legacy that's just as legendary as his investments. Let's dive into how Warren builds companies that last.
I've owned a piece of American business for at least 80% at all times. And, I don't want to own anything else. I want to own a home and things my family wants and all that. But owning 5 homes doesn't mean anything to me because I'm going to be happy with one home and there's a certain amount of things that go wrong.
Section 7. The Art of Value Investing. Let's peel back the curtain and talk about the real engine behind Warren Buffett's empire, his secret weapon. It's not some complicated algorithm. It's not insider information. It's something shockingly simple, but devastatingly effective. It's called value investing. Now, don't let the name fool you. This isn't some fancy Wall Street buzzword. It's the foundation of everything Warren does. And the wild part? It's so simple, it almost sounds too good to be true. Here's the idea. Don't chase hot stocks. Don't follow the crowd. Find great companies that are undervalued and buy them cheap. Buffett calls it buying dollar bills for 50 cents. And if that sounds like the kind of deal you'd never pass up, you're already halfway to thinking like Buffett. But how does he actually do it? Glad you asked, because Warren's method is based on 4 core rules. And if you want to invest like the GOAT, write these down, frame them, tattoo them, whatever it takes. Rule 1. Understand the business. This is non-negotiable. Warren only invests in businesses he can explain in plain English. No crypto, no obscure biotech, no tech startups burning cash with buzzwords. He doesn't care how hyped it is. If he can't understand it, he won't touch it. Think about it. Warren loves companies like Coca-Cola, See's Candies, Duracell, and American Express. Simple products, predictable cash flow, loyal customers. If a fifth grader can explain the business model, Warren's interested. If it needs a 30-slide PowerPoint, hard pass. Rule 2. Look for a moat. Now we're talking about strategy. Warren loves companies with a moat. Imagine a castle protected by a deep river. That moat keeps enemies out, and in business, it means competitive advantage. Coca-Cola has brand domination. Apple has ecosystem lock-in. American Express has premium trust. These are companies that can't be easily copied, and that's exactly what Warren wants. If a competitor can steal your customers overnight, you're not safe. But if you've got a moat, Warren's all in. Rule 3. Buy at a discount. This is where Warren becomes a shark. He doesn't buy when everyone's hyped. He waits and waits until the market messes up. Maybe the economy crashes. Maybe a great company misses earnings by a penny. Panic hits, stocks tumble, and Warren pounces. To him, that's like buying a Ferrari for the price of a Honda. The car's still the same, it's just mispriced. And when it rebounds, he's miles ahead. Rule 4. Hold forever. This might be Buffett's most legendary move. He doesn't flip stocks like day traders. He's not playing the short game. His motto, our favorite holding period is forever. He finds great companies, and he lets them grow. Through crashes, through booms, through decades, he's not trying to beat the market next quarter. He's building wealth for the next generation. Want proof? Check this. In 1988, Buffett bought a massive stake in Coca-Cola. If you'd copied him and put in $10,000, today you'd have over $200,000, plus tens of thousands in dividends along the way. That's the Buffett effect. And here's the real secret. While Wall Street's losing its mind over the latest meme stock or inflation headline, Warren is chilling. Literally. He's sipping cherry Coke, reading 500 pages of financial reports a day. No guesswork, just math, just logic. That's how he built a portfolio with massive stakes in Apple, Bank of America, Coca-Cola, Kraft Heinz, and more. His Coca-Cola stake alone, worth over $25 billion. Because Warren Buffett doesn't gamble, he calculates. And in the next chapter, we'll explore how Warren stays laser-focused when markets go crazy, and why his mindset during a crisis is what separates billionaires from beginners.
Secular approach, who have also been very successful. Let's take Warren Buffett of Omaha, Nebraska. If you had put $10,000 in 1965 into his company, Berkshire Hathaway, you would have $1 million today. Warren was a chapter in my 1972 book, Super Money, so I've known him a long time.
Section 8. The Big Wins. All right, it's time to talk about the greatest hits. The moments where Warren Buffett didn't just win, he dominated the game. These weren't lucky guesses. They were the result of decades of discipline, patience, and sticking to the plan. So buckle up, because these moves didn't just make money, they made history. Let's start with a bubbly legend, Coca-Cola. It's the late 1980s. The market had just taken a gut punch in the Black Monday crash of 1987, and stocks were all over the place. Most investors were panicking, but Warren, he was watching, waiting, and then he pounced. In 1988, he started scooping up shares of Coca-Cola, a company he knew inside and out. Why? Because it had everything he looked for. A product everyone recognized, global dominance, and a moat a mile wide. People don't just drink Coke. They love it. They associate it with memories, childhood, and happiness. It's a brand with emotional glue. Warren bought 7% of the company for $1.3 billion. At the time, that seemed bold. But today, that stake is worth over $25 billion, and Berkshire pulls in $700 million every single year in dividends. That's right, $700 million a year for holding shares of a company that sells sugar water. That's not an investment, that's financial wizardry. Now, let's rewind even further, back to the 1960s. American Express. The company was in a full-blown crisis. A financial scandal had shaken investor confidence, and its stock tanked. Wall Street was bailing, but Warren, he leaned in. Why? Because even during the chaos, American Express had something priceless: brand loyalty. Warren saw people still pulling out their Amex cards. Businesses still accepted them. The customers' trust still rock solid. So, Warren bet big. Decades later, That play is worth over $35 billion. It's one of Berkshire Hathaway's largest and most lucrative holdings. But wait, Buffett's biggest surprise move came in 2016. After avoiding tech stocks for decades, Warren shocked the world and started buying Apple. That's right, the guy who once said he didn't understand tech decided to back the world's most valuable tech company. Why? Because Apple wasn't just a tech stock. It was a consumer brand, a cash-printing empire with unparalleled brand loyalty and a product ecosystem that locked people in for life. Phones, watches, services, it was a moat Buffett couldn't ignore. Berkshire now owns over 5% of Apple, a stake worth more than $160 billion as of 2025. That's more than the entire market cap of companies like FedEx or Honda. Just think about it. Every time someone buys a new iPhone, a piece of that profit rolls into Buffett's pocket. This isn't just a phone, it's a dividend-spitting machine. And it didn't stop with stocks. Warren didn't just buy pieces of companies. He bought entire businesses, all in. Let's run down the list. Geico, a quiet insurance company Warren had been eyeing since his early days. Today, it's one of the crown jewels of Berkshire. Dairy Queen, because who doesn't love a Blizzard and a Buffett deal? Duracell, the battery in your TV remote? Yep, that's Warren's too. BNSF Railway, one of the largest freight railroads in America, completely owned by Berkshire Hathaway. Warren's secret? He doesn't micromanage. He finds great businesses, buys them at the right price, and lets smart people do their thing. He's not a boss, he's a builder, a facilitator, a visionary who steps back and lets excellence flourish. These weren't just investments, they were legacy plays, strategic moves that turned Buffett from millionaire to multi-decabillionaire. And all of it, done with calm, clarity, and an ice-cold cherry Coke in hand. Trust me, you're going to want to hear the next chapter.
Okay with me. I don't have to make money in every game. I mean, I don't know what cocoa beans are going to do. There are all kinds of things I don't know about, and that may be too bad. But why should I know all about them? I haven't worked that hard on them. In the securities business, you literally every day have.
Section 9: The mistakes. All right, we've seen Warren Buffett crush the stock market like a chess grandmaster, but now it's time to flip the coin. Because here's the truth. Even the GOAT makes mistakes. That's right, the Oracle of Omaha has taken some serious L's, and some of them, they're hard to believe. But what separates Warren from the average investor isn't perfection, it's how he handles failure. Let's start with the one that still stings, Google. Back in the early 2000s, Google was a rising star, a scrappy little search engine that was about to revolutionize the internet. Buffett had the chance to invest early. His buddy, Todd Combs, even urged him to take a serious look. But Warren passed. Why? He didn't understand the tech. He stuck to his rule. Only invest in what you understand. Sounds safe, right? But fast forward to today, and that decision cost him a jaw-dropping $200 billion in potential gains. Yep, you heard that right. $200 billion. That's enough to buy multiple NFL teams, host 10 Super Bowls, and still have change left for a private island or two. Buffett later admitted, "I blew it." But here's what makes Warren legendary. He owns his mistakes. He doesn't hide from them. He studies them, learns from them, and uses them to sharpen his strategy. Because if you're not learning, you're losing. Now let's talk about another swing and a miss, IBM. In 2011, Warren took a $10 billion bet on the old tech giant. He believed IBM had staying power and thought it was undervalued. At first, it seemed like a classic Buffett value play. But the tech world was shifting fast. Cloud computing was exploding, and IBM was getting left behind. Innovation was slow, growth stalled, and competitors like Amazon and Microsoft ran laps around Big Blue. By 2018, Buffett had sold most of his stake at a loss. It was a rare moment where Warren's long-term vision didn't match where the world was headed. And again, he took full responsibility. "I was wrong," he said. "No excuses, no finger-pointing, just brutal honesty and a commitment to keep evolving." Now here's the ironic twist. Buffett's worst investment was actually the company that made him famous, Berkshire Hathaway. Wait, what? Yep, the original Berkshire Hathaway, the textile business, was a money pit. Warren admits he held onto it far too long, pouring cash into an industry that was circling the drain. He later called it my dumbest investment. He said he bought it out of spite after being lowballed in a share buyback and let emotions cloud his judgment, a rare lapse for a guy who usually operates like a robot with a calculator. But guess what? That failure? It became the foundation for Berkshire Hathaway's empire. Because instead of doubling down on the mistake, Warren pivoted. He used the shell of Berkshire to launch his investment juggernaut, buying up Geico, Dairy Queen, and eventually, Apple. So yeah, he took a hit, but he turned that hit into a historic comeback. And that's the real lesson here. Warren Buffett doesn't avoid failure. He embraces it, he studies it, he grows from it. While other investors panic, hide, or spiral, Warren adjusts and comes back sharper. That's why at 94 years old, he's still at the top of his game. Because the real superpower, it's not being right all the time, it's resilience. Coming up next, think market crashes would slow Buffett down. Think again. Let's dive into how Warren not only survived the worst financial disasters, but walked away even richer.
Enough sense to learn from these people that life went better if you behave better yourself. It took a while. So I advise you to seek out, as your partner in business, your partner in life, whatever it may be, look for the people that actually are examples to you.
Section 10. Facing market crashes. All right, let's step into the storm, the financial chaos, the blood in the streets moments, the days when Wall Street melts down and the news screams panic. Because this is where Warren Buffett becomes a legend. Most investors dread market crashes. Their palms get sweaty. They sell everything. They flee like the market's on fire. But Warren, he's shopping. Yep, you heard that right. Market crashes are Buffett's favorite time to buy. Let's rewind to Black Monday, October 19, 1987. The stock market plunged over 22% in a single day. People were calling it the next Great Depression. Billion-dollar fortunes evaporated in hours. And Warren, he was buying Coca-Cola. While the world was falling apart, Warren saw a golden opportunity. Coke wasn't going anywhere. People weren't going to stop drinking soda just because the market crashed. The brand was strong, the business model was solid, and the stock was on sale. So what did Warren do? He scooped up shares, millions of them. That move would turn into one of the greatest investments of his life, now worth over $25 billion and delivering hundreds of millions in dividends every year. Now fast forward to the 2008 financial crisis, the biggest economic collapse since the 1930s. Banks were failing. Lehman Brothers went under. Fear was in the air. People were stuffing cash under mattresses. And Warren, he struck a deal that only Buffett could pull off. He invested $5 billion in Goldman Sachs, one of the world's most powerful investment banks, at a discount. But not just any discount. He negotiated preferred shares and warrants, guaranteeing him sky-high returns no matter what. In the middle of the panic, Warren locked in a deal that would make him billions in profit. Why? Because he wasn't afraid. He understood the business. He knew it would survive. And he knew that when everyone else was selling, that's when the best bargains appear. Which brings us to 2020. COVID hits, global shutdown, markets crash, airlines grounded, oil prices go negative. Everyone's glued to their screens, watching the Dow nosedive. And Warren? Chillin' in Omaha. No panic selling, no emotional decisions. He calmly held on to his best stocks, Apple, Coca-Cola, American Express, because he knew the businesses were solid. He also trimmed some weaker positions and quietly bought into companies he believed would thrive post-pandemic. Because here's the Buffett mindset. Be fearful when others are greedy, and greedy when others are fearful. That's not just a quote, that's his playbook. When the market goes red and CNBC sounds the alarm, Buffett sees a Black Friday sale. Falling prices aren't losses, they're markdowns. Think about it. If your favorite $100 shoes dropped to $50, you wouldn't cry. You'd buy 2 pairs. That's how Warren sees stocks. Crashes don't scare him, they excite him. Why? Because he's playing the long game. He's not trying to time the bottom. He's buying great companies at great prices and letting time do the heavy lifting. And remember, every single crash, From 1987 to 2000 to 2008 to 2020 ended the same way, with the market recovering and Buffett walking away with an even bigger fortune. Because Warren isn't driven by emotion, he's driven by logic, discipline, and math. So when the next crash hits, and it will, ask yourself, are you running with the herd, or are you thinking like Buffett? Up next, want to know the real secrets that make Warren untouchable? Let's break down the fundamentals of how he wins, not just with money, but with mindset, habits, and razor-sharp focus.
Focus on all kinds of variables, partly because...
By academics, you mean professors of
right,
finance?
Yeah, the data's there.
In business school?
Sure, and the data's there. So they focus on whether if you buy stocks on Tuesday and sell them on Friday, you're better off, or if you buy them in election years and sell them in other years, you're better off, or if you buy small companies. There are all these variables because the data are there. And
Section 11, the secrets of Warren's success. All right, we've seen the billions, we've seen the bold moves, but let's dig deeper into the mind of Warren Buffett. Because the real secret to his success, it's not luck, it's not timing, it's how he thinks. Warren isn't just rich, he's disciplined, he's focused, and at 94 years old, he's still outthinking people half his age. So what's his secret sauce? Let's break down the 5 habits and mindsets that turned a kid from Omaha into a global icon. Secret 1, read like crazy. First up, reading. And we're not talking about a few articles or scrolling Twitter. We're talking 500 to 600 pages a day. Warren devours information like most people binge Netflix. Annual reports, newspapers, books, transcripts, memos, you name it. The best investment you can make, he says, is in yourself. Why? Because knowledge compounds, just like interest. The more you learn, the sharper your decisions. It's like putting your brain on steroids. And here's the kicker, Warren calls reading his workout. No treadmill, no bench press, this is his gym. He says if you start with just 20 pages a day, you'll be ahead of 95% of people in 5 years. Simple, powerful, free. Secret 2, stay disciplined. Warren doesn't get swept up in hype. While everyone else is chasing shiny new trends, he's sitting back with a cherry Coke and asking one question. Does this make sense long term? During the dot-com bubble, tech stocks exploded. Everyone was throwing money at companies that didn't even make a profit. Warren, he passed. During the crypto craze, he called Bitcoin rat poison squared. Harsh, maybe, but guess what? He didn't lose a dime in the crash. He's not afraid to go against the crowd because hype fades, fundamentals last. Secret 3, think long term. Warren doesn't care about tomorrow's stock price. He's planning for 10, 20, even 50 years down the line. When he buys, he asks, would I be happy owning this company if the stock market shut down for a decade? He's held Coca-Cola since 1988. That's nearly 4 decades of growth, dividends, and brand strength. He's not trying to get rich fast. He's trying to get rich forever. Secret 4, surround yourself with smart people. Enter Charlie Munger, Buffett's right-hand man for over 50 years. Charlie isn't a yes man. He challenges Warren, debates him, and pushes him to think harder. That's the kind of partner Warren values. He also hires world-class managers to run Berkshire's companies and then gets out of their way. No micromanaging, just trust, delegation, and accountability. He once said, it's better to hang out with people better than you. Pick out associates whose behavior is better than yours, and you'll drift in that direction. Smart people plus smart questions equal smart decisions. Secret 5, stay humble. Despite having a net worth north of $140 billion, Warren lives like a regular guy. Same Omaha house since 1958. Still drives himself to work, eats McDonald's, and drinks 5 cherry Cokes a day. At Berkshire's annual meetings, nicknamed Woodstock for capitalists, he answers shareholder questions for hours with zero ego. He admits his mistakes. He owns up when he's wrong. He keeps it real. Because Buffett knows, success without humility, that's just luck waiting to run out. So there you have it. The real engine behind Warren Buffett's empire isn't just dollars and cents. It's discipline, it's a curiosity, it's humility, and above all, it's consistency over time. Coming up next, Warren's not just earning money, he's giving it away. Big time! Let's dive into the giving pledge, the billions he's donating, and the legacy he's building beyond the balance sheet.
I have the pleasure of introducing a good man whose great decision is going to change the world, Warren Buffett.
One of the richest men in the world, mega billionaire Warren Buffett says he is giving away most of his fortune to charity.
Buffett has pledged to give away the bulk of his fortune to the Bill and Melinda Gates Foundation. And
Section 12, the Giving Pledge in Philanthropy. Let's talk about Warren's heart. In 2006, he made a move that shocked the world. He pledged to give away 99% of his wealth. Yeah, you heard that right, 99%. He teamed up with Bill and Melinda Gates to create the Giving Pledge, encouraging billionaires to donate most of their fortunes to charity. As of 2025, Warren's donated over $50 billion to causes like global health, education, and poverty reduction, mostly through the Bill and Melinda Gates Foundation. Imagine giving away $50 billion. That's more than the GDP of some countries. But Warren says wealth isn't about what you keep, it's about what you give. Warren's philosophy: he believes in using his money to make the world better. He said his kids will get enough to live comfortably, but not so much that they do nothing. The rest? It's for humanity. And he's inspired over 200 billionaires to join the Giving Pledge, including Elon Musk and Mark Zuckerberg. But it's not just about money. Warren's hands-on with his philanthropy, ensuring his donations have maximum impact. He's not just writing checks, he's changing lives.
When we own stocks. And the New York Stock Exchange being open has nothing to do whether the Washington Post is getting more valuable over a 5 or 10-year period. And what we want to do is be right on the business. If we're right on the business, the market will take care of itself. And if the stock exchange closes on Saturday and Sunday, and I don't break out in highs, so if it closes for a couple of years and the business does well, we'll do very well.
Section 13. What's next for Berkshire? All right, we've gone through the highs, the lows, and the legendary moves of Warren Buffett. But now comes the billion-dollar question, quite literally. What happens when Warren's gone? Let's be real. Warren Buffett is 94 years old. Still sharper than most CEOs half his age. Still crushing Q and his sessions at shareholder meetings. Still reading financial reports like they're bedtime stories. But even the Oracle of Omaha knows he won't be around forever. And in true Buffett fashion, he planned for it. Years ago, in 2021, Warren quietly made an announcement that shook the investment world. He had chosen a successor, Greg Abel, vice chairman of Berkshire's non-insurance operations. Now, Greg may not be a household name, but in Buffett's world, he's a rock star. Abel's been with Berkshire for over 2 decades. He helped build its massive energy empire, overseeing Berkshire Hathaway Energy, which now supplies electricity to millions of Americans. He's known for his calm, calculated leadership and Buffett-style humility. Warren's confidence in Greg is crystal clear. In his words, Greg understands Berkshire's culture. He's the guy, the right person to lead after I'm gone. So yeah, the future has a name, and it's Abel. But here's the genius of it all. Berkshire isn't just one man. It's a machine built for endurance, a fortress made of cash, consistency, and compounding. Let's talk numbers. As of 2025, Berkshire Hathaway is sitting on over $300 billion in cash. That's not a typo. $300 billion, just waiting for the next great opportunity. That kind of war chest means the company doesn't just survive downturns, it dominates them. And it's not just the cash. Berkshire owns a slice, or all, of some of the most reliable, recession-proof businesses on the planet. Apple, Buffett's biggest win of the last decade. Coca-Cola, a dividend machine he's held since the 80s. American Express, strong brand, loyal customers. Geico, an insurance powerhouse that fuels Berkshire's famous float. Bennis Railway, one of the largest railroads in the country. Berkshire Hathaway Energy, quietly becoming a green energy giant. Each of these companies throws off cash year after year, creating a snowball of wealth that just keeps rolling. But Buffett didn't just build a portfolio. He built a culture, a way of thinking that prizes patience over panic, value over hype, integrity over shortcuts. This culture runs deep through the halls of Berkshire, from Greg Abel to the division heads to every employee who's learned to think long-term. Buffett once said, "Berkshire is like a painting that's never finished." New companies, new investments, new leaders, all adding strokes to a masterpiece that outlives its painter. So what's next? Growth, evolution, stability, and yes, legacy. Warren may one day step off the stage, but the empire he built, that's not going anywhere. Because it's not just about picking stocks, it's about picking the right principles. And Berkshire, it's built on bedrock. That's Warren's final investment, a company designed to outlive him and keep compounding forever. But what does that mean for you? You may not be running a trillion-dollar company, but there's one Buffett strategy you can start using today. A mindset that can change the way you earn, invest, and live, starting right now.
It's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin. The temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do.
Section 14, the Buffett trick you can use. All right, this is the moment you've been waiting for. After all the billion-dollar deals, mind-blowing returns, and legendary investments, we're zooming in on the one Warren Buffett trick you can actually use to build wealth, starting right now. No, you don't need to be a Wall Street genius. No billion-dollar inheritance. No secret stock-picking magic. Just one simple strategy, and it works. Warren's advice for the average person? Consistently invest in a low-cost S&P 500 index fund and hold it forever. Seriously, that's it. It's not flashy, it's not complicated, but it's powerful. Let's break it down. The S&P 500 is an index that tracks the 500 largest companies in the US, the giants of the economy. When you buy an index fund that follows it, like VU or SPY, you're investing in a slice of all those businesses at once. Apple, Amazon, Microsoft, Google, Coca-Cola, you name it. You're not gambling on one company. You're betting on the entire US economy. And historically, the S&P 500 has returned 7 to 10% annually after inflation for decades. That's steady, strong, and proven. So, let's say you invest just $500 a month, starting at age 25. If that grows at 8% a year, which is totally realistic, you'd have over $1.5 million by the time you're 65. That's the power of compounding, Warren's favorite financial force in the universe. Here's how compounding works. Your money earns interest. Then that interest earns more interest. Then that grows, and grows, and grows. It's a snowball rolling downhill, getting bigger and faster over time. But here's the catch. You have to start early. You have to stay consistent. And you absolutely cannot panic. Most people mess up when the market crashes. They sell out of fear. They wait for a better time. But Warren, he buys when others are scared. Be fearful when others are greedy, and greedy when others are fearful. That's not just a quote, it's a mindset. Market dips are sales, and Buffett sees crashes as Black Friday, deals on the best companies in the world. So how do you start? Open a brokerage account with Vanguard, Fidelity, or Charles Schwab. Search for a low-cost index fund like VU, SPY, or FXAX. Set up automatic monthly investments. Even if it's just $100 to start, just be consistent. Ignore the noise. Don't chase trends. Don't time the market, and don't panic when things drop. Buffett himself says he's putting 90% of his personal wealth for his wife into an S&P 500 index fund after he's gone. Think about that. One of the greatest investors in history isn't leaving behind some wild hedge fund play or exotic portfolio. He's sticking with the simple, reliable path he's always believed in. And the best part? You can do the same. You don't need to be rich. You just need to start. You don't need to be perfect. You just need to be consistent. That's the Buffett trick. Invest in what you understand. Keep costs low. Hold for decades. Let compounding work its magic. Because time is your greatest asset, and every day you wait is money left on the table. So don't wait. Start now, and let your money work for you, Buffett style. There you have it, the incredible story of Warren Buffett, the kid from Omaha who turned a few bucks into a $140 billion fortune. From selling gum at 6 to building a $1 trillion empire, Warren's shown us that wealth isn't about luck. It's about discipline, patience and learning from mistakes. His strategies, his secrets, and his heart have changed the world, and now you can use his wisdom to change your life. So, what's your next step? Start reading, start investing, or just grab a cherry Coke and think long-term. Smash that like button, hit subscribe, and share this video with your friends. Let's spread Warren's wisdom and build wealth together. Comment below, what's one thing you learned from Warren today? I'm reading every single one. See you in the next video.